friends, this is John Kingston from JR Trading Zone. Once again, thanks to all my subscribers. For the past few weeks, my subscriber count has increased a lot. Thanks for all the support you are providing to me. A lot of good comments. Very, happy to read all the comments. And thanks to all once again. In this video, I am going to reveal two important things which a trader needs. For the success in stock market, a trader needs these two essential factors. One is the edge, EDGE. Other one is the hedge, HEDGE. What is edge? Edge is a system which you are following and it should have at least 40% win rate. You can be an option buyer, seller, or trading in futures or anything, swing trader or anything. The method you follow should have at least 40% win rate. 40% win rate provided with proper risk reward, money management and position sizing can make you a successful trader. I have made a video on that. If you want, you can go and watch the video. I will be giving in the I button. Very important video. The importance of risk reward. The next thing, a system. A system means I personally follow patterns because I am a chart trader. I see everything in chart and I watch patterns, and according to the patterns I trade. Some people work on strategies. If you are an option seller, you can go with strategies. I will be revealing all the strategies one by one. If you are an option seller, you will be going with the strategies. So any strategy which you follow should have an edge, and that edge can make you a successful trader, provided, once again I repeat you, with proper money management and risk reward. The next one which we need is hedge. Hedge, especially for option sellers, I will say, or option buyers' plan of trading is entirely different from sellers. Sellers mainly depend on strategies. If you are not depending on strategy, it is highly risky to trade in options, especially in option selling, because the loss will be unlimited. So mostly if the very biggest trader also they put on strategies. Okay, then one important thing is hedging when you come to option selling. Why people hedge? What are the two reasons? One is for safety. When you hedge it, an instrument you are selling, and for the protection you are buying another instrument or another strike. Okay, there are several methods of hedging in stock market. Even if you are invested in cash market, you can hedge it in derivative market. You can hedge it with futures. Like that, a lot of methods are there, but I am not going and confusing by talking about all the methods. The video will also become lengthy. Now I am just going to options, especially option selling. Why people hedge? Two reasons I told you. One is to limit the risk. Your risk is defined. Whenever you enter into the trade, you know what is your profit, what is your loss. Okay, in option selling, that's why people, especially very big traders also, trade strategies. They put on strategies. In each market condition, there are different strategies we have to apply. That I will be telling one by one. But strategies means hedging. Hedging, first reason is to protect your capital. Keep your risk under control. Okay, that is the first reason. The second reason is to increase your returns. In terms of percentage, definitely you will get a better return when you are hedging. Okay, these are the two reasons for hedging. One, to have a controlled loss, or you are defining your loss and entering into the trade. Thus, your loss is limited. You are limiting your loss. The next case, to increase your profit. When you hedge your position, get a good return when you compare to plain option selling. Okay, these are the two reasons for hedging. I will show from a simple presentation why traders are hedging. Again, I will repeatedly say you how to hedge, in which market condition, which strategy we should follow. That is a different subject. Okay, In trending market, we have to follow some strategies. In sideways market, we have to follow some strategies. There are a lot of strategies like that. Then in low VIX, when the VIX is very low, India VIX is very low, we have to follow other strategies. What is India VIX and everything, I think as a trader you may know. If you don't know what is India VIX, I have made a video. You can go and watch what is India VIX and how it is working. In low VIX environment, which strategies can be applied? When the VIX are very high, what strategies are can be applied? That is a different subject. Okay, so I am telling that a trader should have these two qualities, one the edge and the other is hedge. Okay, these two qualities can make an option seller, especially an option seller, a successful trader. Okay, not about option buying. Don't confuse option buying with option selling. I always say option buying is the most riskiest segment in stock market, and it can be traded only when you identify the patterns. Okay, when you know where the market is going to give a breakout, then only you can become an option buyer. If you want to know the strategies, the breakout patterns, everything, I have made two videos. One, the OSR at CPR. That video is very important. That is a strategy. Okay, it is a chart pattern and strategy which I follow. The next one, gap border strategy for option buying. The next one is gap border strategy. That two videos I have made on patterns. That is the edge. That is the system. That is the edge. Okay, I have written about 22 patterns which I follow in stock market. Book is available in Amazon. If you are a serious trader, you can go and download. It will be very beneficial for you. Subscribe my channel, share it to all your friends, trading community members. Each and every point of my YouTube growth, I will be revealing all the strategies one by one. Okay, now let's go to the small presentation and I will show how hedging increases our profit. Okay, selecting option chain November 30th. Okay, next month option chain Nifty 50. You can see this orange line. This is the ATM strike. If you don't know what is ATM, OTM and ITM, I have made videos. Go and watch the video. Okay, now I will show you one thing. As an option seller, you think the market won't go beyond 20,000 next month. What you are going to do? Simple. You are going to sell this option, 20,000 call option you are going to sell. As an option seller, if you think the market won't go beyond 20,000 until this expiry, November 30th is the expiry. If you think the market won't go beyond 20,000 until November 30, definitely what you are going to do? You are going to sell this option. I will show you. Okay, this is just a very simple video. Now you see, this is plain option selling. I have made a separate video on the dangers of option selling, especially plain option selling. Here you see the estimated margin which you have to pay is 98,535. That is the maximum profit you are going to get if the market is not going beyond 20,000. It is 6,122. You are getting a return of 6.21%. The probability of winning is 80%. Always the option seller is having a very good probability, we know. We can also increase the probability if we move the strike on the upside. Okay, now the loss is unlimited, loss is undefined. Now you see the returns. Here I want to show how we can increase our returns. Here you are getting 6.25. Now you are doing a hedging. What is hedging? I will show you. You sold 20,000 call option. Now what you are going to do? You are going and buying 20,500 call option. Here you are going to buy. Here you sold 20,000 and you are buying 20,500. Now let's go to the payoff. Now you see. Now the estimate margin for this is only 40,000 rupees, nearly 40,000 rupees, 39,201. Before it was 98,000 something. Okay, now the maximum profit you are going to have is 4,955, but the percentage of return is 12.64. When we did plain options, once again I will show you. You see, when you are doing plain options, the return on investment is 6.21. When you are hedging means when you are buying an option on the opposite side, two benefits. One, your risk is defined. The maximum loss you are going to incur is 20,045. Okay, you have controlled your loss. The loss is very big. That's another subject. We can do a lot of strategies for reducing our loss also. Here the profit you have increased. You have increased your profit by 6%. Already you had 6%. Now the profit is 12.64%. Okay, this is the beauty of hedging. This is just a credit strategy. Okay, we can say this is a credit spread. I am not here to explain the strategy because strategies should be applied according to the market condition, or I want to just explain why a trader, especially an option seller, should have an edge and hedge. Okay, edge is very important for option buyer, no doubt about it, because he depends only on the edge. But for an option seller, he should be more dependent on hedging. Hedge is important because all strategies does not work under all market conditions. Okay, when the VIX is 10, we can apply one strategy. When the VIX is about 20, we should apply another strategy. So edge is important for both option buyers and sellers, but for option buyer, he depends only on edge. That is why we say option buying is the most riskiest business. Okay, in this video I just want to tell the importance of edge and hedge. These two are like two eyes of a human being. For a trader, these two, edge and hedge, is very important. Practice well, learn all the strategies well, and become a successful trader. That's all from this presentation. Hi friends, I think you enjoyed watching this video. This is also a very important video. All videos regarding stock market is very important if you are a passionate trader. If you are a passionate trader, each and every aspect and each and everything about stock market is very important. In which segment you are trading, that is not a problem, but you should know all about stock market. If you are a serious learner, watch all my videos, follow all my videos. I have made a lot of videos on psychology too. Then once more, I am asking everyone just to like my videos. Like is a great applause which I get from my viewers. Thanks for supporting my channel. Learn more, earn more. This is John Kingston signing off from JR Trading Zone. Bye.